more stability, you can have that diversification. What I think you want to do is if you have cash, as well potentially if you have stocks, look at bank and brokerage accounts. If you have precious metals while you're thinking about it, maybe those can be moved overseas in some capacity as well. And there may be forms to fill out depending on where you live that report to the government where you've moved your money offshore. We suggest that you follow that. We help clients get connected with all the different tax professionals around the world that they need to make sure that they're fully in legal compliance, because we believe in doing things legally here. We're not trying to hide money. We're trying to give you more opportunities. Fill out the form if you're required to fill it out. But you're going to be protecting your money, in my opinion, moving it overseas. I'm not saying you don't want to have any money in the country that you live in, even if the country that you live in is one where the banks aren't that great. You want to pay your local bills. And if you live in the US or the UK, fine, keep some money. But here's the concern. What happens if you start having some of these bank failures? I've been telling you this since the bank failures in 2023. The US government will basically decide if you have over the insured limit, whether they're going to cover you. Most Western countries have some kind of deposit insurance program. In Europe, it's 100,000 euros in a country. So what if you have more than that? Well, we've seen what happened in Cyprus. They give you a haircut. They take some of your money. But that can happen anywhere. If you have more money than the insured limit, they don't have to give you that money. And so that's a decision that Congress and the FDIC in the United States would have to make if they can't find a buyer for some of these banks that might fail. Is, are we going to insure people over $250,000? What I see, culturally speaking, is you're going to have less and less consumer appetite to bail people out who have a lot of money, because people in the U.S. are increasingly suffering. They're not going to want the government's money going to give you back your $1 million, with the government saying, all right, fine, for the sake of keeping things calm, we'll give everybody their full money back. And by the way, as a libertarian-minded person, hey, that's the risk you take. You have to understand the stability of the financial institutions that you work with. Perhaps they shouldn't. Perhaps if you have $5 million in a bank and it fails, you should only get the $250 back. But I think that you perhaps could feel more comfortable keeping your $5 million in a bank overseas with a better balance sheet. Again, perhaps it's one where they don't lend out your money, or perhaps it's just one where you feel better about the bank itself, where it's in an asset haven where they actually need to, take care of people's wealth. The issue is, are we going to bail out people who have too much money? Even if you look back at the financial crisis, the UAE, they said if any bank fails, and they have higher requirements for who can be a bank, and you have to be traded, and it's more stringent there. If any bank fails, the government will just pay you. Would they do that again? I don't know. But, that's a pretty strong promise. It's a bigger promise than the US government made. And so what concerns me here is Western countries are broke. And as they become broke, and as the world diversifies, and as the economic engine of the world moves away from the West, you have people who are angry about that, and they have less money, and they want the government spending their time and money solving their problems. They don't want the US government bailing someone out who has millions of dollars. And so all that being said, why would you want to keep all of your money in a Western country where there's talk?
If you're interested in getting a better return on your money, passive income and cash flow, tax benefits that could reduce your taxable income, and inflation protection, all while building a legacy of wealth you can leave to your heirs, then you need to get this free guide on the single most important alternative investment to diversify your retirement income. All you need to do is click the link in the description or type in the URL you see on the screen to learn more.
Not from the nomad capitalist, but from analysts, from journalists, from people who study this stuff. They're not trying to create chaos. They're just saying, here's what we see. And obviously, in the last year or so, you've seen a number of bank failures in the US. You saw Credit Suisse go down. This is something that I think people kind of forgot about because things have been good for a while. But things will be good until they're not good. And I would want to have my money again. Forget the light asset protection benefits, forget the currency diversification benefits, perhaps even forget the fact that for Americans it's harder, but for everybody else, if you move your money overseas, there could be new investment opportunities that aren't available to you where you live. Put all that aside. I think those are all reasons to want to have some money overseas, but consider in all these Western countries, things aren't looking perfect. I'm not here to prophesy doom and gloom. I'm not saying you're going to lose all your money. I'm not putting those countries on par with some, banana republic, but I'm saying that smart people are talking about risks. And so what I would want is a banking portfolio. There could be some transactional accounts that you have overseas, what I would call tunnels as well, where you go to a country like a Georgia or an Ecuador or a small country where you can get started with $100, just get an account. And you can use that to get a debit card and pay your bills. You can also get accounts where you basically cold storage, where you're just parking money and it's sitting there until you need it. Call it the war chest, call it whatever you want. That could be Singapore, that could be Switzerland, that could be Liechtenstein, that could be the Bahamas, that could be any number of places. Americans are going to have fewer options, but we have one or two banks in Switzerland that will work with Americans. They happily take Americans from $500,000 to $1 million and up. So there's different price points to get into this. But if I had uninsured money in Western banks, I would say to myself, sure, you could split it between a bunch of different Western banks. And you could say, hey, instead of $1 million in Chase Bank, I'm going to have $250 in 4 different big US banks. Sure, that's a strategy. But who knows what could also happen if smaller banks fail.
They warn that a recession is right around the corner and the market will crash, vaporizing America's retirement accounts. Here's what you need to know. Economists are pressing the panic button. Harry Dent says we're facing the bubble of all bubbles. He predicts a stock market crash worse than the 2008 crisis. During that time, 401ks became known as 101ks or 201ks, and America lost $10.2 trillion in collective wealth. He's not the only one warning about the inevitable. Wall Street legend Gary Shilling believes the economy is heading into a full-blown recession. As a result, he sees the market plunging by 30%, and that's at the very least. John Hussman, president of the Hussman Investment Trust, believes stock prices are at their peak. He predicts the S&P 500 could crash 65%, erasing a decade of stock market gains. In other words, stocks are a bad, very bad gamble right now. The only alternative is to find out how to build wealth without Wall Street. Inside the pages of my new book, you'll discover the asset class that exists outside of Wall Street's control. An asset class that weathers economic storms and still generates outsized returns. Now it's finally accessible by the rest of us. This book shows you how to use it to secure retirement, no matter what happens in the stock market. But you don't want to wait until we're in a full-blown crisis. You'll want to discover the wealth-building secrets in this book today. Click the link in the description below to get your copy.
If things got bad enough, would they come and try and take a haircut from people? I don't know. But wouldn't it be nice to know you have some money where all your eggs aren't in one basket? One of the things that we help our clients do is open bank accounts around the world. Again, we would connect you with tax professionals where you live to make sure that you follow all the legal requirements to where the government's not coming after you because you did something wrong. You want to follow the rules. We also look at things and say, okay, once you're already going offshore and setting up this stuff, do you need a holding company for investments? Do you need a trust? If you're going to have a trust, why not have that trust offshore where you've got greater diversification? And so for me, this is a greater conversation of the conversation that your country's banks are no longer as good as they were always thought to be, says, what should I be changing? Obviously, I would tell you, once you're thinking about all this, you should look at, do I need a second passport? Where do I go when the taxes go through the roof or they try and take some of my money? Countries have borrowed from their citizens' retirement accounts. They've given people haircuts. Who knows what could happen? So I think the main thing for Western bank failure risk is having the cash overseas and then asking myself what structure that's going to go in. Is it an account in my own name? But once you get up to the level of Switzerland and Liechtenstein and the Bahamas, do I want to put that money into a trust and strengthen my asset protection by it not just being offshore, but now it's not even in my name? Yeah, a domestic trust offers me some protection, but an offshore trust is going to offer me greater protection and greater diversification. So one question begets the next, but I think it's part of the greater concept of, is your money as safe in your country as you thought it was? And by the way, even if it turns out it's perfectly fine, what's the harm of having half of your money sitting in Singapore where probably it's also safe? Even if your bank doesn't fail or there's no craziness or Elizabeth Warren doesn't come to tax the hell out of you to pay for some bailout of other banks. What's the harm of diversification? Heck, you could even get a residence permit in some smaller countries by opening bank accounts there. Some in Europe, some in Central and South America, some in Asia, including places like what we talk about, Malaysia. Nomad Capitalist Live is held in Malaysia. We're going to have my Malaysian banker on site to meet people and help you open an account. If you open an account and fund it with enough money, they will give you a multi-year residence permit and you have the option, but not the obligation, to go and live in Malaysia, tax-friendly Malaysia. So you start to see how, okay, Western banks having an issue. it should spark you to ask many more questions. Not just move some of my money over here, but ask, what happens if banks fail? What happens if I need more asset protection? What can I get by moving money to other countries? Hey, in some cases, you might even be able to get a passport from it. So this is what Nomadic Capitalist helps people do. Understand that the world is changing. Take advantage of that, not just in moving the money, but a whole system of how do I take back control, knowing that my country isn't everything I thought it was cracked up to be.